Okay students, now we are going to discuss a variable costing technique. It is also called marginal costing or direct costing, right? Under variable costing, we consider only the variable portion of the cost, right? Only those manufacturing costs that vary with output are treated as product cost, and we know that the product cost, right? Material, labor, and overhead. But in overhead, we consider only the variable portion, not the fixed portion, right? We exclude the fixed portion, fixed manufacturing overhead. That's why we say this is my variable costing technique. Okay, and the variable costing, this would usually include direct material, direct labor, and variable portion of the manufacturing overhead. Okay, if I want to calculate unit product cost, so add direct material, direct labor, and variable manufacturing overhead, right? We will take these three elements. Okay, variable costing, we know that it is based on contribution format income statement. Before discussing the variable costing contribution format income statement, I just want to tell you about where we use variable costing. Variable costing is used for decision making, right? Internal decision making. For the external reporting, we use absorption costing, and internal decision making we use variable costing, right? Where we easily segregate the variable and fixed cost, right? We can emphasize the cost on the cost behavior as well, right? That's why we say that we segregate the variable and we segregate the fixed cost, right? Okay, in variable costing contribution format income statement, because variable costing, if we want to calculate the net income, so we must prepare the contribution format income statement. And how it is prepared, we have done or we have discussed in our cost volume profit relationship chapter, right? Where we prepare the contribution income statement, right? Okay, sales less variable cost, where what is the variable cost or the expenses? The manufacturing variable cost and the variable selling and admin cost. We take all variable cost, right? So we deduct all variable expenses from our sale, so we got contribution margin. After deducting all my fixed expenses from my contribution margin, we got net income. Okay, what is my fixed cost? The fixed manufacturing cost and fixed selling and admin cost, right? So variable cost method or variable costing focused on cost behavior, right? Emphasize on cost behavior. It segregate the variable cost as well as fixed cost, right? Okay, fixed manufacturing overhead is not treated as a product cost. Already told you in this method we don't treat fixed manufacturing overhead as a product cost, right? Okay, fixed manufacturing overhead is treated as a period cost. Yes, I have told you this becomes a part of the period cost, right? Not the product cost, like selling and admin, and we know that the selling and admin is the period cost. Consequently, the cost of a unit of product in inventory, unit of product, or cost of goods sold under variable costing method does not contain any fixed manufacturing overhead cost. In these two costs, you can see here the cost of goods sold, and in unit product cost we don't contain the fixed manufacturing overhead cost, right? Okay, variable costing is sometimes referred to as direct or marginal. Told you about it that the variable costing is sometimes referred to as the direct costing or marginal costing. Now, sum up the all classification. Cost classification, absorption versus variable. In absorption costing, how we calculate the product cost? See here, direct material, direct labor, variable manufacturing, and fixed manufacturing, right? In our product cost, you can see here we take all these four terms, right? Like material, labor, variable portion, and fixed manufacturing portion. And in period cost, like selling and admin, I've told you about the selling and admin, The variable as well as fixed become my period cost in absorption costing. And what about my variable costing? Product cost. In variable costing product cost, we consider only the direct material, direct labor, and the variable manufacturing overhead. We consider only, or we take only these three, right? Or we can say the variable cost, right? Direct material, labor, and variable manufacturing becomes my product cost, and the fixed manufacturing overhead cost is become my period cost, right? And we treat as a fixed manufacturing cost as a period cost and variable costing method. Clear? I hope you understand. Thanks.